Oh, it's about that time of day again, isn't it? Welcome back. Welcome back. In tonight's trading psychology video, boy, I get a great question for you. How do I stop chasing trades? How do we stop chasing trades? I get a great email from a client last week, and he said, Joe, I know I shouldn't do it. I know it's probably robbing me a bunch of money every week, but I can't resist. How do I stop chasing the market? How do I stop taking those impulse trades, chasing the market, because it's costing me money, it's wasting me time, and it's killing my confidence in the prospect, right? So how do we break this bad habit of chasing the market? I made this mistake a lot when I was a new trader, and the good news is, even though this is a pretty common, pretty nasty habit that a lot of us fall into, there's actually 3 really easy steps to solve this problem and get you off the chasing trades wagon and get you onto those consistent, confident trades and getting the profitable results out of these markets that I know that we all want. So in tonight's video, I'm going to talk about three simple steps to getting yourself off the chasing the trades and start getting yourself in the green every day with us in our trade room. You ready to learn more? All right, let's jump right in. So why do good, hard-working traders, why do they chase such bad trades? As I mentioned in the introduction, this is a pretty common problem. I suffered from this when I was a new trader. It's one of the most counterproductive habits, and it's probably one of the most common reasons why people don't achieve their trading goals, becoming confident and consistently profitable traders. Chasing trades is dangerous, that's right, it's unproductive, and it definitely will eventually kill your trading career if we don't find a solution. The good news is, I've got 3 steps to break that bad habit of chasing trades. Let's talk about it. Let's start with a question though. What does it actually mean to chase a trade? What do I mean when I say chasing trades? Well, first of all, one of the core kind of components of becoming a profitable trader is that we always want to buy at support and we want to sell at resistance. Okay, I think we all know this. Didn't we learn this right in, day trading 101, right? We want to buy at support, sell at resistance. That's what we do with support and resistance. I'll tell you, this is one of those simple rules that in the heat of the moment is kind of difficult to follow. When I was a new trader, I began to realize by going back and looking over my trading journal that a lot of my losses were being taken because I simply wasn't buying at support or I wasn't selling at resistance. It was simple as that. I might have begun looking for the trade around support or resistance, but I didn't actually get into the trade around support or resistance. So that's kind of one of the first things. When I say chasing trades, I'm talking about we're not buying at support. We're not selling off resistance. Another example of chasing a trade would be entering a trade late. Maybe you missed the ideal entry, or maybe you don't know what the ideal entry even is. But the bottom line is, when you wait too long, when you enter that trade late, you put yourself in a position where you have just fundamentally a lot more risk on that trade for a much smaller reward. Most of us know this already. We don't want to do it that way. We don't want to risk large and earn small, right? We want to do the opposite. We want to risk small to earn large if you want to be successful in the long term. So that's my definition of chasing a trade, all right? It's not buying at support or selling at resistance. And it's entering the trade way past the entry signal or way past the proper trigger when the risk-reward ratio is now no longer in your favor. And we'll talk more about this as we go deeper into this lesson here tonight. So chasing trades is a pretty bad idea, right? So why do good, hard-working people, right? Why do they have such a hard time with this mental mistake? Why did it take me so long to get over that initial hurdle of, chasing the markets everywhere? From my experience, and I had a lot of personal experience on this, and I've helped thousands of traders overcome this problem, there are probably 3 reasons why. The first one is pure FOMO. It's simple. People chase trades because they don't want to miss the move. You know what I mean, right? It's pure greed. It's pure impulse. I don't want to miss this move, as if there's never going to be another opportunity to take that trade ever again. Now, another, kind of second reason why I think good people chase bad trades is they don't know their numbers yet. Excuse me. And I'll tell you, I'm going to talk a lot more about this as we go deeper in this video. So You'll definitely want to watch the entire thing tonight. But once you know your numbers as a new trader, it's going to be a lot easier to avoid that FOMO, right? That causes so many impulse trades, such as chasing the market. Once you know your numbers, at least for me, once I knew my numbers, things got a whole lot easier. And I'll tell you more about that here as we get deeper into this lesson. And then last, but I think certainly not least, I don't think people truly understand the danger of chasing trades. And it's not just the money, all right? Let me talk about this. When you chase the market, you put yourself in a low probability position with a ton of risk, and there's an opportunity cost to it. You're oftentimes missing the better entry that's usually coming shortly thereafter, all right? So you're no longer risking small and earning large, right, when you chase a trade. You're no longer trading with the smart money, as we say, and chances are you're going to have a hard time staying in that trade without using an enormous stop loss, which means the risk on that trade threatens to completely wipe out your account. That's the biggest problem with chasing trades. You put yourself in that position where even the smallest shakeout can shake you out. That's why they say shaking out, right, the weak hands, or you have to use this big, enormous stop loss. And when you're trying to use a big stop, one loss can really take a huge chunk of your account. Remember, if you lose 50% of your account, you'd make 100% return on what's left to make the money back. So really a very dangerous. And then again, there's also an opportunity cost to this. When you're chasing one trade, you're missing another, right? Usually better trade setting up a little bit later down the road, right? When you're chasing after one rabbit, what's the old trading saying, right? You can't chase two rabbits, right? You chase two rabbits, you get no rabbits. When you go chasing a trade, you're usually going to put yourself in a position where you're all stressed out and you're managing that position with that big risk and small reward, and you're missing the next really good setup that is coming, right around the corner. I think that's one of the biggest reasons why people can, tread water for 10 years and not make any money in the markets, because these mental mistakes, like chasing these trades, right? They rob them of whatever good things they do each week, right? These chasing trades take back all their gains. So at this point in the video, now hopefully you know what I mean when I say chasing trades. You also know why they're dangerous and kind of why we do it, right? So now I want to show you 3 pretty simple steps to break this pretty expensive habit. It is a pretty expensive habit, and try to get you moving in the right direction in your trading account. Now, the first step in breaking the habit of chasing trades is to learn how rotation works. And we'll talk more about that as we go deeper into this lesson. So make sure you keep watching here tonight. The second step to breaking the habit of chasing trades is to truly understand what a good entry looks like. What does a good entry look like and why it's a good entry? Okay, we'll talk more about this as we go. Second step, learn how to find a good entry. And the third step, and again, we'll talk about what I mean by knowing the numbers, right? You got to understand the numbers, because once you understand the numbers, you'll find it a lot easier to break this bad habit, right? So learn rotation, find a good entry, and know your numbers. That's the secret recipe to breaking the habit of chasing trades. Let's talk about this. Let's talk about the first step, right? The first step is to learn how rotation works. I'll tell you right now, rotation might be the most important word in a trader's vocabulary. Let me show you why. The first thing you have to understand is, yes, the markets are very complicated. Yes, they're always changing. Yes, they're very unpredictable, but they only move in 2 ways, okay? They're either trending, which means they're bullish or bearish, right? They're moving up or down on the chart, or they're range bound. Okay, that's the only other way the markets move, is range bound and trending. Range bound obviously means they're trading sideways. They might be moving up and down a little bit, but they're going sideways inside of a trading range. This is the key. Again, yes, the markets are always different every day. No, they'll never be 2 days exactly the same. Yes, they're very complex. Yes, there's a lot of moving pieces to learn when you're a new trader. But you have to break it down into something this simple. It really is this simple. The markets are either trending or they're range bound. And once I know which type of market I'm trading today, then I can begin to trade the rotation, right? Let me show you what I mean by that real quickly here. Let's start first with a trending market. Trending markets love to rotate back and forth inside trend channels. Okay? In a bull market, this is a bullish example, obviously, our goal is to buy around the lows of these channels and take profit up around the high of these channels. The most important thing you need to understand about trending markets is when we buy off the low of a bull channel in this case, we are able to risk small for a big reward. Okay? I want to make sure you understand that. When you trade this way, you're trading now with the smart money in the markets. Why are they smart money? Because they've been around long enough. You know, those are the most desirable trades when you're buying off the low of that bull channel. The smart money's been doing this for a long time. That's what makes them smart, right? There's no rookie smart money in the markets, right? You got to earn that title in the markets. The smart money's been around long enough. They know how good and desirable these low risk, high reward trades are. And when you take those trades, buying off the low of a bull channel or selling off the high of a bear channel, you have a much higher probability of success. So if I chase the market and I get in with a bad habit of buying towards the high of that channel, I'm now getting into my trade when the smart money, the professionals, are now getting out of their positions, right? They bought the low. They're now getting out at that high. Remember, when the market's trending, we want to get into trades at the beginning of this rotation, not at the end of it. Okay? If we're getting in at the beginning of rotation, we get in with the smart money. We get in with low risk, high reward. And that makes it a highly desirable trade, which makes the odds of success so much higher. That's why you don't want to chase trades. Understand how the market rotates. Now, in a range-bound market, the market now moves sideways on the chart. Price going to rotate back and forth from the top to the bottom of that trading range. When you understand this, you can now see how selling at the high of that range or buying at the low of that range will now allow me to get a much more desirable trade because, again, I'm risking small to earn large. And remember, the bigger my risk reward ratio is, the earlier I get in on that rotation, the more desirable that trade is to the bigger traders in the market, which makes the odds of my success, right, very much higher. If I chase the market and I try to buy towards the high of the range or I try to sell towards the low of that range, in other words, if I get in towards the end of that rotation, I now put myself in a position where I'm no longer risking small to earn large, but more importantly, I'm getting into a new position when most of the smart money, the big money in the market, they're getting out of their position. I'm the sucker in that trade, right? I'm the retail trader that's literally taking the contracts from those professional traders when they're done with them, right? That's going to go against me. That's going to have a much lower probability of success, right? So know how rotation works in a range. Trade during the beginning of the rotation. Take your profit targets towards the end of that rotation. And whatever you do, don't get in towards the end of that rotation. That's why chasing the market is such a bad idea. Now, again, in a trending market, trade the rotation. I want to get into that trade as early in that rotation as possible because that allows me to risk small to earn large. It's highly desirable trade for bigger traders, which increases my odds of success, right? Same thing with a range. I want to trade as early as possible. That's where I risk small to earn large. That's where I get better odds of success because of that self-fulfilling prophecy. If I chase it, if I get in towards the end of that rotation, I'm asking for trouble and my winning percentages are going to suffer. That's the key in this first step. Learn rotation, Again, there's only two types of markets, right? All there are trends and there are ranges. That's it. Figure out what type of market you're dealing with. Figure out where the range of the channel is. Trade that rotation. That should make it easier to avoid chasing trades when you actually understand how these markets actually work. Step number 2. The next step to breaking this nasty habit of chasing trades is to know what a good entry looks like and what's going to give me the best odds of success. Okay, here are 3 simple rules for finding a good entry. You ready? 1, trade the rotation. And again, I don't want to sound like a broken record right now, but is it a range? Okay, where's the range? How can I get in at the beginning of that rotation? That's where the money's going to be, right? Or is it a trend? If it's a trend, where's my channel? How can I get in at the beginning of that rotation, right? The step 1 to finding a good entry is always get in towards the beginning of that rotation and avoid the temptation to chase it after that rotation or towards the end of that rotation. Step 2, most important, know what a good entry is, right? To know what a good entry is, you have to know how to find a way to trap traders on the wrong side of the market. And I'll tell you, one of the first trading mentors, one of my first trading coaches almost 15 years ago, back when I was a kid, he told me right away, he said, Joe, the easiest money you're ever going to make in trading is when you can trap those inexperienced counter trend breakout traders on the wrong side of the market. You know, in my trade room, I'm constantly looking for ways to trade the rotation, but I do so in a way where I trap in inexperienced traders who are stuck in the wrong direction with the wrong location and have no choice but to get out for a loss. Remember, when I'm getting in and the inexperienced traders stuck on the wrong side of the market are getting out, what does it do? It causes a stop run. Stop runs or run in the stops, right? Short squeezes, right? Run in stops. These are the most explosive moves you're ever going to see in these markets. When you trap traders on the wrong side of the market, whether it's a range or a trend, you put yourself in an easy position to grab a quick profit target, remove the risk, and then hold that trade, because if you did your job and you get in during the beginning of that rotation, you can make a big profit during the rest of that rotation process. And then third, last but certainly not least, once again, a good entry will always allow me to risk small to earn large. And the good news is, if you understand how to trade rotation and you're trapping traders on the wrong side of the market, there's a good chance this third step will work itself out automatically. You know, it'll allow you to take a small risk for a potential big, large, juicy reward on that winning trade. All right, guys? And so how do we do that, right? How do we do that? Let's take an example here of a bullish trend in a trending market. We know the market wants to rotate back and forth, right, from top to bottom of a bull channel. One of my favorite trades in a trending market is to time the entry right near the low of the channel, right, the beginning of the rotation, and look for sellers to get short just below the moving average. Because once those bears get stopped out of those shorts, price will race higher to complete the rotation back up to the high of that channel. That makes a great profit for a very, very small amount of risk to take on that trade. It's a great example of when the market's trending, in this case a bullish trend, we trade the rotation. But more importantly, we look for the good entry by trapping those counter trend sellers on the wrong side of the market, using one of my favorite setups called a failure setup off the low of that channel. And then, of course, second type of market, because again, the markets only move in two ways, is a range bound market. So we know that ranges will rotate back and forth, and we know that ranges act like magnets. So our job is to trade that rotation, right? We're going to buy low, we're going to sell high, and if somebody is foolish enough to chase a breakout going lower, I once again focus on trading the rotation from the low of the range back to the high of the range, but I do so in a way that traps in those breakout sellers. In this example, the range above us is a magnet, right? So I just wait for sellers to grab the breakout pullback, and I can get long when they start to fail, knowing that that range rotation will do all the hard work for me. Trade the rotation, trap in those breakout sellers, Risk small for the opportunity for a big, big reward. This is a simple recipe for success in both trends and in range-bound markets. All right, now, the third step at this point, we've talked about trading rotation. We've talked about trapping in traders. The third step in breaking this bad habit of chasing trades is you have to know your numbers. So what do I mean when I say know your numbers? Well, the most important number that you need to be aware of is how many good trades do you actually get every day? How many times each day can we trade the rotation? How many times can we trap traders? How many times do we get that chance to risk small to earn large? You know, a lot more often than you might think, right? On any given trading day, you're likely going to see anywhere between 3 to 6 really reliable trading opportunities to trade rotation, risk small to earn large, really embrace the big money in the market, and trap traders, right, to get that edge in your trading. If you really understand how often these trades actually set up every day, you'll soon realize there's really no reason to be chasing the market, right? What, because you're never going to get another one of these again? No, you're going to get a lot more of them. Just going to see the fact that this is not the only trade you're going to see that day. There's no need to chase trades, right? There's no scarcity in the market. There are plenty of these rotational opportunities almost every day we trade to make our money. And I think one of the most important things I've learned in my personal trading career, and I try to instill this in all of our students here at School of Trade, is that the best traders in the world understand one very simple point. If you want to make more money, you don't trade more often, guys. You trade bigger size. You know, the old saying, right? If you want to make more money, don't trade more often. Don't trade more setups. Don't trade more markets. Don't trade more indicators. Trade more contracts. Right? Trade more shares, trade a bigger size. So think about this again for me. On any given day, right, we're going to see 3 to 6 of these low risk, high reward, trading rotation, trapping traders, easy winner opportunities pretty much every day in these markets. Once you know that, why the FOMO, right? Why are we so scared of missing that one trade right now? Even the best traders in the world take their eyes off the chart for 2 seconds and they miss something, right? Once you know that there are going to be plenty more where that came from, it removes this sense of scarcity. And hopefully it allows you to calm down, stay patient, and wait for the proper entries like we teach here at School of Trade. And remember too, if you want to make more money, don't trade more often, trade more size. That's the key to real success. Do the same thing every day. Just increase the position size, right? That's the key to growing your account. That's the key to taking only a couple trades each day and making as much money as you want in these markets without needing to stress out, chase the markets, or really do anything different each day. Once you learn what a good trade looks like and you start to increase that size, it becomes pretty easy. And we have quite a bit of fun doing it together in our trade room, don't we? So let's do a quick recap about why chasing trades is bad and how to solve it, right? First of all, we chase trades for one simple reason: FOMO. It's all about the greed, right? We chase trades because we feel there's some sense of scarcity, you know, like as if we're not going to get a half dozen of these opportunities most days, right? And we don't really appreciate the danger of what happens when we chase trades. You know, when we chase trades, it puts us in that low reward, big risk, low probability, and again, right, the opportunity costs, right? When we're chasing trades, we're not in the position to find the next best trade. And it really puts our account in danger, because the only way to stay in a bad trade is to use a big stop, and those big stops take big chunks of profit or big chunks of capital, which are difficult to make back as a new trader. But the good news is, okay, here's the good news, the solution's actually pretty simple. Learn to trade rotation. Learn how to find opportunities to trap traders on the wrong side of the market. And if you want to make more money, don't trade more often, right? Stay patient, stay disciplined, and trade bigger size. And hopefully this video has given you the information, right? The knowledge that you need to stay patient, stay disciplined, giving you kind of a plan of attack to hopefully give you, right, the confidence you need to stop chasing trades and get your trading back on track. So If you want to learn more at this point, I hope you do, because I have a lot more to share on this topic. The first thing I would recommend is to definitely take my free trading course on my website. I'll put a little pop-up here for you in the upper right-hand corner. Definitely grab that free course pop-up. I'll put a little pop-up there in the upper right-hand corner. I'll also put, of course, I'll put them down in the description of this video right now. Grab a little pop-up, grab that free trading course, because inside that free trading course, I'm going to teach you how I trade rotation in both trending and range-bound markets, how we find the best setups by trapping traders who are stuck in losing positions, and how I help my clients go big on our best setups that we teach in our video classes. If you're like me and your goal is to earn daily income in these financial markets, no matter which market you're trading, and you haven't quite turned the corner yet to becoming more confident and consistently profitable, make sure, first of all, you grab that free class I mentioned in the upper right-hand corner. Also, make sure you subscribe to our YouTube channel, because I have a lot more knowledge to share. And again, right, as always, grab that class link in the upper right-hand corner. Learn these techniques, because they'll change your career. They'll change your life in the process. They certainly have for me and many, many of my clients. All right, guys. Boy, that's it for me tonight in this video, guys and gals. If you enjoyed this video, please make sure you subscribe. Hit that like button if you haven't done so already. And stay tuned for more great videos here on this YouTube channel. And I'll finish tonight with another question. What's the biggest light bulb moment for you while watching this video? Was it the rotation? Was it trapping? Was it knowing your numbers? What do you think? What was the most important part of this video tonight? Let me know in the comments section below, and I'll keep making more videos to keep helping you guys get better in your trading. Hope you guys enjoyed it tonight. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.